Hello, everyone. It's my pleasure to be here with you today. But I first have to start by apologizing that despite having some Brazilian origins and having a picture of the Pelourinho in my home office, my Portuñol is too bad to try to make this presentation in Portuguese. My apologies for that. So what I wanted to show you today, and I'm going to share with you my screen, is an alternative way we have devised or are devising in Europe a market alternative to PSD2 or to open banking, if you want to extend that beyond payments. So, but first, let me start by introducing myself. So I've been working for well over 30 years now. The common denominator in my professional career has been the finance industry, technology, and innovation. So I've been involved in electronic invoicing, electronic payments in the mid-90s, and the first applications of mobile electronic banking. Since 2004, I'm the CEO of Eurovit, which is a company that introduced account aggregation in Europe. And since later, I'm being heavily involved in the lobbying and institutional aspect of PSD2 and open banking in Europe. And as such, I helped create EDPPA, which is the European Association of TPPs or third-party providers, as in PSD2. As an ETPPA representative, well, I've been the chair of that organization until January this year, when I stepped down to vice chair. And as a representative of the ETPPA, I sit at the European Retail Payments Board, which is a consensus-driven body that represents both the demand and the supply side of retail payments in Europe, and which is the host for the project that I'm going to present to you today. I'm also representing the TPPs in the European Payments Council. And lastly, I'm also a vice chair of the Spanish FinTech Association. So without further ado, let me first introduce a little bit what drove to PSD2 and what PSD2 is about, and what kind of problem we're trying to solve with SEPA API, which is the project that I'm going to show to you today. So people tend to think that there was nothing before PSD2, so that PSD2 introduced open banking in Europe. So that's what people tend to think about the prehistory of open banking in Europe, meaning anything that happened before PSD2. The truth is that Europe has been quite pioneer in open banking. So a Spanish bank called Bankinter introduced account aggregation back in 2001. If we move outside of Europe, well, the many different milestones in open banking, but I would say that modern open banking started in '98 with Yodlee in the US. And basically what Bankinter was doing in 2001 was emulating the account aggregation provided by Yodlee in the US. So they launched private account aggregation for individuals, account aggregation for SMBs, and also payment initiation, not understood as it is today as a means to pay in an electronic commerce, but as a means to do wire transfer between individuals or between enterprises. But we also had other revolutionary projects more or less around the same timeline. So in 2003, Microsoft bCentral, which was a portal for SMBs in Microsoft Spain, launched an account aggregation service for SMBs and professionals. And the beauty of this project was that you could fill in automatically via the API facilities in an Excel spreadsheet with all the account balances and transactions from all your banking accounts. So I've seen this was announced as something revolutionary last year by Plaid and Microsoft. Well, this actually happened in Spain in 2003. Then we also had projects like BBVA launching Tu Cuentas in 2008, which was featured as Forrester Research as the way banking would look in the future. And certainly, if the futures today, they were spot on in their predictions. And then moving outside of the banking sector, in 2012, Fintonic, a Spanish PFM, and I believe the largest PFM service provider in Europe, was born, and is now operating not only in Spain but also in Chile and in Mexico. And sorry that I concentrate so much in Spain, but I believe that Spain was pioneer in Europe in regards to open banking. Of course, beyond this, it expanded throughout Europe. Other companies were created. Most notoriously, Sofort, which was the clear leader in payment initiation, but also Trustly, Bankin, Tink, and others. And by the way, Tink recently acquired Eurobits and is supposed to become the leader in open banking in Europe. So what was PSD2 trying to do? Well, as I said, it didn't invent open banking. It just gave a shield of approval to a number of services that were already going on in Europe, and tried to further regulate them. So basically, the objective of PSD2 is a directive that has the objective of trying to increase innovation and competition in electronic payment services, subject to a very high level of security, and all for the benefit of the European consumer. So basically, what PSD2 has to do is to balance innovation and security in the right way, and it does so by giving the shield of approval to new payment figures, which is the account information service provider, which is what was previously known as account aggregation or account aggregators, but only in the payments domain. So PSD2 is not covering the aggregation of deposits, loans, pension plans, mortgages, etc. It's just payment accounts, which in a European country would typically be a current account and a credit card. In some countries, it might include savings accounts, and in some others, it might exclude credit cards for strange legal reasons. And then payment initiation service providers, which are the companies provided payment initiation services, which means that they are companies that are triggering a wire transfer from one bank account to another, but without actually entering into the possession of funds. So basically, what PISPs are doing is they're programmatically logging in to a banking account with the consent of the payment service user or the account holder, and filling in for him a payment form and executing the payment. Or rather, giving the instruction to the bank to execute the payment, because the payment is processed in the regular channels that the bank operates at. So, in a nutshell, PSD2 is recognizing these two figures and specifying how they have to behave, what kind of license they have to obtain, and how they are supervised. So in terms of timelines, I'm not going to bore you with all the details, but PSD2 is quite a complex piece of legislation, as all directives in Europe are. We call directives first level legislation. We have to be granted via second, third, and fourth level legislation. And basically, it started entering into force in January 2016. But only in a very, very minor way, and only after the regulatory technical standards on secure communication and strong customer authentication were published and approved, and the market was given 18 months to adapt to them, did it fully enter into force in September 2019. So basically, PSD2 has been running in Europe for well over 1.5 years. So I think it's time to be able to assess on whether if PSD2 has brought to the market what we had expected or what the politicians had commended to it. So has it brought further innovation and competition in the payment space? Well, I think the answer is no. And this is not just a personal opinion. I think there's general consensus that PSD2 has not brought at this point in time what it promised to do. So I would say that banks are not happy because they have invested a significant amount on what PSD2 calls dedicated interface, which is a nice way of calling APIs that nobody's using. Because we, from the other side, from the TPP side, claim that they're not working as they should, and for a number of reasons. The quality of the API is not good enough. The performance is not good enough. We believe that the information provided through the API is not rich enough. So in the end, banks have made a significant investment. TPPs have made a significant investment in onboarding those APIs, and usage is extremely reduced. So we've all made an investment for which we're getting absolutely no return to. So for these reasons, we believe that PSD2 is not working. So at a high level, there are the three issues with PSD2. One is the lack of incentives for APIs to work. Then there's an issue with how innovation works. And there's a third issue about governance. Of course, I could go into much further detail that I'm going to go through now. I'm just going to go through very high level issues with PSD2 on why it might not be working. So regarding the first point, which is the lack of incentives. I would do this exercise. Just imagine for a second that this is your first day at business school. First day, first class, and at the end of the class, you get your first assignment. So basically, the teacher asks you, well, you're running a business, and law is forcing that business to invest in an interface that is going to provide its most valuable asset to its competitors free. And then you have to choose what the correct answer to these problem would be. So first question is, well, since you're always trying to do your best, you're going to design a bulletproof, high-performance, feature-rich, modern API to avoid further problems down the road. That would be answer A. Then answer B would be, you would use the interface as a way to limit and control your competitors' access to the asset. And C, you make a low performance and unreliable interface. And of course, there's answer D, which would be that both B and C are correct. Well, if you chose B and C, I think you're en route to getting good grades in this Business 101 assignment. And probably you're progressing adequately in terms of your open banking knowledge. But it seems that the EU legislators thought that A would be feasible. So without no incentives, banks would do great APIs for TPPs, and we would all live happily ever after. Then the second issue, which is about innovation. So let me continue with another question. So if I ask you, what do you think about when you think about innovation? Would these come to your brain? Would you think in stuff like this? So politicians and legal bodies, or would you rather think in stuff like that? A couple of youngsters in a garage working their asses to make something work. Well, if you, like me, thought about the second scenario, then either you or the EU are wrong. Because, well, we claim that the EU invents, China copies, and the EU regulates, and we seem to be very proficient at regulating. But the fact is that there are a number of studies that show that the correlation between legislation and innovation is negative. So places with lots of laws tend to have less innovation than places with less or simpler legislation or legislative bodies. But it seems that in Europe we think otherwise, and that's maybe why we have so many unicorns, specifically in the fintech space. And then the third big issue is about governance. So remember, I told you that the directive is level 1. And I talked about an RTS, regulatory technical standard for secure communication and strong customer authentication. Well, this is a domain of the EBA or the European Banking Authority. So this entity is, amongst many other things, in charge of developing this piece of legislation, which is the one that details how things have to be done. So basically, the directive says what has to be done, and the technical standard says how it has to be done. And the fact is that if you go to the EBA's website, well, it's not very hard to guess by the name. European Banking Authority. It's not the European Payments Authority. That the task of the EBA is related to prudential supervision, is related to the banking sector, and it has absolutely no linkage to innovation, competition, and no particular or focus on the payment space. So it is all natural that the EBA has acted as per its mandate, and it has seen PSD2 through the lens of prudential supervision and through the lens of the banking industry. So basically, what legislation is doing is mostly making life difficult to TPPs and in a way protecting the banking industry from potential threats, namely the GAFAs. Current TPPs are a minor threat, probably, to the banking industry, although this might change. But the fact is that the EBA is not fostering innovation and competition in the payment space. And I could go for hours into the details of why this is the case, or to justify what I just said. So before jumping into the project, let me briefly talk about 3 pieces of technology, and I will do so because these 3 pieces of technology are key in driving payments for the physical point of sale, which account, depending on who you ask, about around 80% of the total number of transactions are on by volume. And these technologies are, first, instant payments. So if you want to take payment between accounts to the physical point of sale, you have to eliminate the execution risk. And a way to eliminate the execution risk is via instant payments. So there's no way that I pay at a store and then I can go to my bank account via my mobile or whatever, and then turn that wire transfer down, because it's already happened, it's already been executed, so 0 execution risk via instant payments. Then there's proximity technologies that would allow using my mobile in contact with a physical point of sale. It could either be QR codes or NFC, but you know that one of the big phone providers has a monopoly of their NFC chip, although that is being revised by some authorities. But in any case, you need proximity technologies to interact with the physical point of sale. And lastly, the use of IBAN proxies, primarily by using the mobile phone number as a proxy to your IBAN or account number, making payments much easier. So I'm just bringing this to give you the context of the size of the market. We're not just talking about electronic payments in electronic commerce, but we're talking about being able to pay with your account at a physical point of sale, which is a massive market. So, knowing that that PSD2 was facing and was going to face some challenges, the ERPB, the body that I mentioned before, decided to study if there could be an alternative approach to PSD2. And when I say an alternative, we are never trying to rewrite PSD2, but to see what we could build on top of PSD2 via agreement between different market players or different stakeholders. So basically, what is the problem that we are trying to solve? So the problem is there's a number of companies, the red squares that you see there, that we called asset holders, that they're holding an asset owned either by an individual or by a company, and that asset could either be a transaction or some information, and part of the value of that asset is currently locked. If it weren't locked, it could be used by asset brokers to provide additional value to consumers and businesses. So typically, the asset owners and the consumer and the business would be the same entities, only accessing their information or their transactions via a different player, which would be the asset broker. And if we manage to find the right way to unlock this value, we would be creating a huge benefit for the market. So the first thing we did is generalize the problem that PSD2 is trying to solve. We're not talking about payments. In the domain of PSD2, an asset holder would be an ASPSP, or an account servicing payment service provider, and an asset broker would be a TPP. We're thinking further down the road to beyond payments and eventually to beyond finance. So the first alternative, the first way to solve this problem was the one that PSD2, or the way PSD2 tried to solve it. So I would call it the PSD2 approach, which is basically trying to unlock this value through a detailed, complex regulatory framework, which is extremely expensive to write, extremely expensive to interpret, and extremely expensive to supervise. Plus, it's all written in legal terms, so it's extremely detailed. But at the same time, you know, when you write legal pieces, many things are open to interpretation, and there's somebody that has to write an API specification based on that legal interpretation. So it's always complex and very expensive, and with lots of uncertainty costs. Plus, the way it solves it is by connecting every asset broker or TPP to every asset holder or ASPSP in Europe. And so last time I checked, there are, depending on how you count them, between 5,000 and 7,000 credit institutions in Europe that are obliged to provide a PSD2 interface, and around 300 licensed TPPs. So if you multiply the numbers, you see that there's millions of connections that have to be made, and that is extremely inefficient, because it's not just managing the connection, it's managing the relationship, handling the disputes, the complaints, etc. So it's a very inefficient way to solve the problem that I described. Then there's a second alternative: just let the market sort it out for itself, which it might work beautifully. The problem is that then what would happen is that you would have platform business models where based on three corner models where the platform is connected to all the parties, and you know that these generates economies of scale, and economies of scale tend to create monopolistic forces. So initially it could be a good way to sort out the problem, but in the end the consumer, which is the one that should ultimately reap the benefits, he's going to be ripped instead. And then there's the third alternative that the ERPB proposed to study, which is trying to find a fair way to distribute the value and risk that is to be unlocked. So basically, what the SEPA API access scheme is proposing is a scheme based approach to the open banking or open data, open transactions problem. So the way schemes have worked in other areas of the payment industry or other industries. So basically a four-corner model where all the asset holders would be connected to the scheme. At the same time, all the asset brokers would be connected to the scheme. So these automatically sorts out the N-1 problem. So they're all bound by a contract, by a common understanding of the rights and obligations of all the parties. And this would potentially benefit all the stakeholders, the asset owners via discount on services or cashback for sharing their assets, in the role as end users by either getting a lower price for the same service or more value for the same price. So I foresee many scenarios where asset brokers can provide the end users services that would simply not be possible by being provided by the asset holders alone. And then both the asset holders and the asset brokers can potentially make a business of this. But first, they would need to recover the costs, their share of costs, both of joining the scheme, which would include funding the creation of the scheme, and their costs of either publishing their assets to the scheme or onboarding those assets in the case of the TPBs. And both of them, on top of their costs, needs to make a reasonable profit, be it direct or indirect. So with this perspective, the mission of SEPA API access scheme is to try to reap the full benefits of PSD2. So as I said, we're not trying to replace PSD2 as a piece of legislation. It is not an alternative way to comply with PSD2, but it might be a better way to make PSD2 work. Plus, beyond making PSD2 work, to make payments beyond PSD2 also work in a better way, and potentially in the future extending to other financial services beyond payments, and in a more distant future to any other information and transactions beyond finance. So the vision would be, if SEPA API is to succeed, that the EU will lead the way in the transition to a digital economy. So it would have helped by facilitating the disruption of current digitized analog value chains, and the creation of completely new digital value chains through an API economy that leverages the benefits of a scheme-based approach. So this would have helped unlocked hidden value and distributed fairly between the different actors, together with a fair distribution of risk. So just to show you what we mean by this, because this might sound like strategic consulting lingo. So to materialize it, so imagine in the analog world a concrete service, which is providing a loan. So you would typically work to your banking branch, would fill in a paper form and apply for a credit. Then that would be submitted by internal mail to central services for approval. And once the credit is approved, you will be called back to the branch a number of days later to sign the approval, and you get the money in your account. So basically, the situation we're at now is that most of these analog value chains have been digitized, but they have not been significantly changed. So you would still go to your electronic banking, fill in an electronic form for a credit application. That credit form would be submitted for approval. It may be online, maybe even instantaneous, the approval. And in that case, you would just sign with your banking credentials the approval of the loan, and it will be instantly debited to your account. So we haven't changed the way we do things. We just have made them electronic. Okay. Of course, there's a lot of efficiency to be gained, but we haven't changed the world significantly. So in the way we see it with the SEPA vision, it will be much easier to consume bits and pieces of value chains via APIs, and so you could find scenarios where instead of going to a car dealer, selecting a car, buying it, and then apply for a loan, you would just buy a completely new product, which would be a finance car. So in the same showroom, after choosing the car, and via probably an iPad or another sort of tablet, you would fill in some data, including your banking credentials, and you would be requesting the loan to purchase the car, and at the same time, other processes could go on, like registering the vehicle, buying the compulsory insurance, or whatever other service you would need to associate to the car. Then online, you would receive the approval for the loan, and you would sign the acceptance of both the loan and the purchase of the car, and you would walk out in a matter of minutes of the showroom floor with your keys, driving your brand new car. And this is just the tip of the iceberg, and it's not a very ingenious example, which is already happening in some places in the world. But down the road, once we've been able to make this a reality, I'm sure that lots of combined services that we're not even conceiving today will happen down the road. So the way we've done this via the ERPB working group, which I am proud to co-chair in representation of the TPPs, is first, all the relevant stakeholders sit on the same table, and unfortunately a virtual table due to COVID. So the EXAs, or the three European credit sector associations, are represented. The three non-credit sector payment institutions are also represented through EDPPA, which I already mentioned, but also EMA, which is the Electronic Money Association, and EPIF, which is the Electronic Payment Institutions Federation, but also the consumers via BOIC, and the merchants via Eurocommerce. And we have sitting at the same table the European Central Bank, the European Commission, and a number of national central banks from different EU member states. And we've created a working group that's split. We have the plenary, but it's also split into 6 different working groups. The first one looking at different initiatives that could affect our work, so it's basically a stock-taking exercise. Then we have work streams 2 and 3 that look at different user journeys. Basically, what they are picking up is the work from a previous stint, prioritizing the user journeys that we studied then, including new ones, and having a final list of prioritized user journeys that could be part of a scheme in phase 1. Then we have a fourth work stream that is commended with studying who would be the right scheme manager for SEPA API, and then we have work stream 5 analyzing the potential extension of SEPA API beyond payments and beyond finance. This is just exploratory work. Here we face two issues. One is formal, which is that the mandate of the ERPB is limited to payments, and all the members of the working group, in theory, only have acknowledged expertise in payments. So what we're doing is basically making sure that we do not put roadblocks for the further extension of the work in the hopefully not so distant future. And lastly, we have work stream 6, which is in charge of defining the business requirements for the scheme. Basically, all the governance related issues, the pricing models, etc., which are a big issue because they have to be scrutinized by competition authorities. So, excuse me. So, how does this look from a scheme perspective? So basically, as a whole, going from top to bottom, the scheme is accessible to both regulated and unregulated entities, but we're not trying here to fool the law or to bypass the law. So unregulated entities would only be eligible to join the scheme for non-regulated or non-supervised services. And then at a very high level, you would have all the scheme governance, including all the typical aspects of scheme governance, the eligibility criteria, the preamble, introduction, etc., all the general provisions for access to APIs, and the infrastructure requirements. Mind you, the scheme does not comprise the technical elements, so it will not be seen as a hub, but rather as a set of rules. Figuratively speaking, the scheme is a bunch of paperwork, so to speak. Then we would have, in an initial phase, if everything goes well, a sub-scheme that would give access to payment accounts. And the idea is to have this operative as soon as possible. And this would include non-monetized services, which are the services that PSD2 enforces, and premium services that can be monetized, which is everything that is beyond PSD2 or not required by law. Then, in short term, we're looking to expand to savings accounts, which are very close to payment accounts, actually are payment accounts in many European countries, and then further down the road to other asset classes beyond payments, such as securities, loans, mortgages, pension plans, etc. And in terms of timeline, I concentrated on the last stint of SEPA API, but these really started in January 2019. Well, we were commended to determine if this was feasible. So if it made sense to look for a scheme approach to make PSD2 work better and go beyond PSD2 with that approach. And we concluded with a report that was submitted to the ERPB for approval in 2019. I think it was an excellent report. There was consensus that was the way forward, but unfortunately, this was June 2019. The report said that PSD2 was going to constitute the baseline, so the difference between basic services and premium services, and we, the TPPs, together with the Electronic Money Association, believed that it was not sufficiently clear at the time on whether PSD2 constituted a right baseline, because there were many aspects of PSD2 that required clarification via third and fourth level legislation. And we were completely focused on the deployment of PSD2, what was going to happen just 3 months down the road in September 2019. So basically, we did not agree with one of the final recommendations of the report, which was to continue the work immediately. And we consequently, remember I said the ERPB is a consensus body. The ERPB decided to hold the work and resume it at a later stage when the appropriate conditions were met. So in July 2020, the ERPB suggested the creation of an informal group to explore if the conditions were met, or the conditions were appropriate to formally resume the work. And we all unanimously concluded that the right conditions were met. So in November 2020, the ERPB commended us to restart the work, and we are about to submit the final report to the ERPB for approval in June this year, and hopefully the ERPB will approve the report and the recommended way forward, which includes taking the payments part of the scheme to an operational phase as soon as possible, recommending a concrete scheme manager, and to try to find a right host for finance beyond payments and for open data, which is not an easy task, because you have all these different European bodies with different mandates, and it is not going to be an easy task. But we're definitely going to try to not lose the momentum that we've created here, and move towards an open data society via a scheme-based approach with services, meaning information and transactions consumed via a scheme-based approach. So this is what I wanted to share with you today. Now I'm open to questions, either now, if possible, or you have my contact data there in case anybody wants to approach me. So it was my pleasure. Thank you very much for your time, and hope to see you soon in the not so distant future, and hopefully not virtually but physically. Thank you. Goodbye.